Good morning, everybody. Happy Thursday. Happy Ticker Thursday. Hope you guys can hear me okay. Sounds good? Got a bunch of good stuff for you guys today ahead of our State of the Market address next week, which I'm excited about. Is the audio and visual working well for you guys? Yeah. Very good. Very good. AV good. Okay, good. Then we are all set. Perfect. Okay. Let's get started. Why is Serge so tanned? Couple of reasons. I've been playing a bit of golf, and just generally bit in the sun. I guess that's the reason. Mostly work, but had a bit of sun too. So it's good to get some vitamin D, right? So that's the reason why. Anyway, let's get started. I know we were a little bit on and off and set the market here year to date, but we are back on track now. So today, of course, being Thursday, Ticker Thursdays, we don't do set the market on Friday, so not tomorrow, but we'll be back next week on Monday. And I think then we'll be in good shape to do set the market here back on schedule. We've got a lot of great things planned for set the market and for YouTube. You may have noticed a bunch of new things we do between the polls and some of the new videos we're doing, the new how-to videos we're rolling out at least once and then ultimately twice a week, how-to videos, through sort of basic and more advanced topics in finance around the markets, particularly, of course, right? They're not going to teach accounting classes, but, in that, so that's coming as well. So we're looking forward to that. Anyway, so today's Ticker Thursdays, and what I'd like to do, and I've got some of you guys have been around for a while. I used to have a red notepad. We're switching to a blue one here, and that's the plan, a blue one. It's a Trump thing, actually. Trump is actually right here in Zurich. We're actually in Davos, which is like an hour and a half from here. I seem to not be able to get around him. I'm in West Palm Beach, as you guys know, a lot, and he's always there. So every time I land there is Air Force One, and now it's here. It is what it is. Anyway, all good. So let's start off with the markets here. Remember, obviously, our show here is about the markets. What I'd like to point out to you guys, and again, we have our, and I'm going to quickly check the calendar actually now. We have our State of the Market address. It's actually next Friday, the 30th of January, is the State of the Market address. And oh, that sucks. I may have to move that. Actually, no, we can do it. Anyway, and what I'm going to do then is we are going to talk about the rotation in the markets that are taking place, and that's really kind of the main sort of focus here this year. We're seeing the Great Rotation, and the Great Rotation is really all about moving away from the Max 7s from a rebalancing perspective. Okay. So, what about this chart, right? This is really the main part of the chart. And again, we'll talk about this a lot next week when we do the State of the Market. What you want to look at here is the rotation. This is the year-to-date rotation, or actually this is the year-to-date rotation of sectors, and this is just in the S&P 500, but you can look at this more broadly through the lens of the markets in general. When you look at global asset classes, what we tend to see is, some sectors do better than others, and then there's obviously a relative and absolute under and outperformance. And so just to give you an idea, so this week we have energy stocks and material stocks actually outperforming materially, no pun intended, the, let's say, technology stocks. You can see, for example, the XLK, which is tech stocks, is basically flat on the years or on the month. But you can see that energy stocks and material stocks were up, 8 and almost 9% each, right? And we think this is just the beginning of it all. In fact, if you look back on a 3-month rolling basis, it's the same thing. On a 3-month rolling basis, tech stocks are flat, and these two sectors are up 12 and 13.5% respectively. So, the great rotation is starting. Most people are going to miss out on this because everyone's Max 7 centric and S&P centric. And it's going to cause a big problem for a lot of people. Most people, even if they listen to it or hear right now, they won't do anything about it. And so, I think we're going to look back at this, 6, 12, 24 months, 5 years from now, and it'll have been a massive, massive opportunity that most people didn't do because we have such a concentration. Now, this does require portfolio construction to be done the right way, or in terms of allocation. So, this is not just a trade, like this is an action allocation. So that's what's going on in terms of performance. Now, the other thing I want to show you, and this is a chart that we are going to discuss next week in State of the Market as well, and there's many of these kind of charts, but I'm just giving you one of them. This is the energy sector compared to, as a ratio chart, to the NASDAQ 100. And what you're seeing here is you're essentially seeing a relative underperformance of energy versus tech, right? That's been, years and years, basically since 2008, right? So basically since the great financial crisis, but we actually think we're now beginning to start to reverse that whole rotation. So that's a really big move as far as relative rotation. In terms of some single opportunities, I do want to quickly show you guys a couple of things that we're looking at, just because it is Ticker Thursdays. For those people that are in our profit pro income system alerts, we are likely going to do a trade today in Toll Brothers with options. So look out for that options trade. But Toll Brothers and the home builders are looking really good here. And there's a lot of structural tailwinds, reasons why, but they're looking really good here. So we are going to likely do a trade on that for those of you that are in profit pro income system, just as an FYI. But even if you just look at this just technically, right, if you just draw some lines on charts, and I always warn people, it's probably worth doing more than just that, but it's a start. When I say probably, I say definitely got to do more than just draw lines on charts. But if that's all you want to do, you could see kind of the reason why this might be a bullish looking setup. Okay, so that is that. Let's see here. What else? Okay, so now we're moving on to some of the tickers. Actually, let's first look at the S&P. So what I'd like to do first is I'd look at the S&P 500. So the S&P 500 is essentially doing kind of what we thought it would do here in January, which is a whole lot of nothing. We have the S&P actually bullish momentum and bullish trend still, but is largely stagnating, right? So I would just want to be mindful of that. There's really a whole lot of nothing going on here. In fact, if you look at the S&P year to date, it's not really doing anything, which is, by the way, not coincidental, because it's exactly why technology stocks are actually, it's inverse to that. It's reverse. So because tech stocks are flat, the S&P is flat. You have to understand that market concentration, that dramatic overweight that the tech stocks have in the S&P. We've talked about it for 2 years now. It is ultimately at some point going to become a huge problem. And not that the S&P has to crash, right? That's a whole nother story. That's not the base case. Those are outlier stories. But just it might just go sideways for 5 to 10 years. And so again, we'll talk about that in our State of the Market address. So the S&P is basically doing a whole lot of nothing. So one of the things about January, and I'm going to make this chart a little bit larger, I'm going to zoom in. We've warned about this all month long so far, and we'll continue to warn. Typically, January is a very difficult month to trade beyond like very short term because it can be very, very choppy on an index level. And you can see it perfectly so far year to date, right? We've had a little bit of movements to the upside in the first part of January. And then we had one down day of 2% 2 days ago on Tuesday. Yesterday I was traveling, so the markets were up 1.25% or 1.15%, and this morning the futures are up. So it's doing a whole lot of nothing, and it's probably grinding people, but there's also a reason why. So we have obviously the meetings in Davos here, right? Those are important. I think people don't understand how important those are for global markets. And then of course you have earnings season, which just kicked off again. So I would just be mindful of that. But there's momentum to be done, right? So if you're someone who likes to trade momentum, be that intraday or on a sort of a daily chart basis, we're holding our momentum workshop, if you will. It's our weekly strategy session this week. It's on momentum, and my colleague Christian just put the link into the chat box there. Let me quickly show it to you. This is the link. You can sign up for the webinar. It's obviously free. It's our weekly strategy session. So if you want to learn about momentum trading, it's happening tomorrow at noon Eastern. And if you sign up, you also get our Rethinking the S&P 500 ebook, which is actually what I just kind of hinted to, right? You get that all in an ebook. I would urge everyone to read that and understand what's really going on underneath the surface. Which gets us to Ticker Thursday. So let's get into the charts. Steve has a question. Serge, any comment on FANG plus 3-day week options expirations? I don't really have any comments outside of Steve. I think there's two things. Typically, when there's more options expiration, it's good for liquidity, but it's typically as an investment banker on the sell side, when we would do stuff like that, or any issuance at all, or anything like this, it's usually done because there's a lot of demand for it, right? So we've gone from weekly options to daily options to 0 DTE to now this. To me, we're just stretching the rubber band more and more. I think ultimately we'll look back at this and we'll see that it was a warning sign, but sort of from a glass half full perspective, I do want to respect the fact that it does provide more liquidity, right? So that's the good news. I think the bad news is the fact that it's happening because it's kind of, it's kind of adding more fuel to the fire. So it's like 0 DT options are great if you want to hedge out or bet on a specific day's events, right? Like, for example, yesterday there was a lot of 0 DT option stuff happening around Trump's commentary, right? In fact, today as well. So that makes a lot of sense, but this is this kind of goes in the same direction. Okay, so tickers. Let's go through some charts. I showed you guys one of them. If you want to type in some tickers you want to look at, let me know, and I'll be happy to go through some of them. Let me just quickly go through Toll Brothers again, just because we talked about it before. So again, if you're a Profit Pro Income System member, we're gonna most likely send out a trade alert on Toll Brothers this morning. So that's one of them that we're watching very closely. In fact, the entire not sector, industry group of home builders looks pretty interesting, and home construction companies like the ITB ETF, you can see it's breaking out here as well. So that's what's going on. One thing that I also want to point out is regional banks. So we've been highlighting regional banks for quite some time, and you can track them, for example, through this PSCF ETF that my friends over at Invesco, It's their ETF. I was invited to the Invesco offices in September or October. I can't remember now. And we talked a lot about these different products. So this is really interesting. You can look at something like KEY, which is the ETF, which is a stock within that segment, right? So that's another thing I think people could look at. James wants to look at ASML. So just one thing to keep in mind, when you look at stocks right now, and I should point this out, it's important to understand when they have earnings, right? So, for example, ASML, let me just first have a look at when these companies report earnings, right? So ASML has their numbers next week, Wednesday, right? So let's look at ASML. Now, just keep in mind that ASML is a critically important company for the entire semiconductor industry, right? They make the equipment that allows you to make semiconductors. So I would keep that one in mind. But ASML is on our trend following work, which is what your question really is about, James. ASML is in a bullish trend, right? So if you're using our market rover, our trend following software, which I would encourage everyone to do because that's how you catch the major trends, you can see the latest trend started in August when the stock was at 714. It's now up 90%, 90, in the green background color. So the answer is it remains in a bullish trend. I would be careful with next week's earnings. Okay. APLD. Okay, yeah, let me see. I don't know what that is, but let me see. Oh, Applied Digital. Okay. Well, same thing for Applied Digital. It's in a bullish trend. Again, check when the earnings are. I don't have it I can check, but APLD, again, bullish trend. So this is your multi-quarter kind of time frame. And then Intel, let me see when Intel has earnings. Let me check here. So Intel has their numbers today, after the close. Now, obviously, Intel has gone vertical, right? So keep that in mind. So I mean, if you're trying to do a trade around earnings, I've done this for a very long time, and I can tell you, trying to do a trade around Intel's earnings after the close, but the result it's worse than a coin flip, right? So people try to do these earnings trades where they think they're going to be able to get right what the stock's reaction is. It's actually quite a mirage, right? And I've been trying to explain this to people, and sometimes people get a bit offended because of it. So first, let me answer your question. So first of all, Intel is, again, using our trend following work. So this is where you use the market rover. So Intel is in a bullish trend. Okay, so that's number one, and it is also in a bullish momentum move. Okay, so if you use our trend or momentum indicator, you will see that Intel has been in a bullish momentum move and remains in a bullish momentum move since January 5th. So both are bullish. Now let me just quickly explain something here about these earnings trades that people do. And this is, again, people tend to get a bit offended when I say this, but it's just when you've seen cycles, you see this happening. Over time, when you roll the dice on these trades, when you're making it, it doesn't matter what the strategies you're using. And we've studied this, trust me, at all the hedge funds I've ever worked with. Ultimately, it's not a winning strategy, a losing strategy. Because the reason people think they make it work is typically because they're doing it in a bull market, and just by definition, in a bull market, stocks tend to go up, right? So they tend to just play the odds of the bull market. However, if you do this long enough, and you do it, let's say, in neutral and bear markets, it stops working. And also, what ends up changing in neutral or bear markets, typically in bear markets, is you end up having more volatility. So the standard deviations, if you're using, for example, someone pointed out iron condors, stops working as well. So if you do this long enough, right, it's essentially a bull market narrative. And we've had a bull market for 16, 17 years, and that's a very long time for people to believe this always works, but it stops working fantastically. And then people basically give up all their gains. So I'm just trying to tell you what the long-term averages are. And again, 17 years of a bull market is a very long time, right? So So that's that. So anyway, so we've gone through a whole bunch of different stocks. We looked at Intel, we looked at ASML. William is asking, will new semi-factories in the US help ASML? I don't know. It's a good question. I honestly don't know. I think with ASML, what I personally am looking for, I think ASML is a Dutch company, if I remember correctly, or something like that. I think it's Dutch. It's not Belgium. It's Dutch, probably, right? So it's a very important company, by the way. So I personally, for me, what I'm kind of looking for is for some sort of a pause, or that may refresh. I have a hard time chasing things, and to me, ASML right now is one of the things where it's just kind of people are chasing it. So I'm gonna just be a bit more patient here on this trade. So anyway, we'll leave it at this. Thank you all for joining. Hopefully, this perspective on the post earnings or on the earnings trade that people try to do helps. And have a blessed day and a great weekend. Again, we don't do the show on Fridays, but we'll be back here Monday. And again, if you want to learn about momentum trading, our strategy session this week is all about momentum trading. We'll teach you exactly how it works, how you can momentum trade from a swing trading perspective or intraday as well. So we'll see you guys in that session tomorrow. Until then, be well and take care. Oh, also, please, very important, please give us a thumbs up, like, and please subscribe to the channel. That way